Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, highly anticipated edition of the day trading program brought to you by Real Life Trading. This is module number 3, friends and family, fans and followers, team and loved ones from around the entire world. How are you all doing on this serendipitously splendid day, night, week, year, month, quarter, wherever you are in the world, the sun always shines. Nola Warren says, hi, everyone. What's going on? Shawnee says, welcome from Oz. That's right, Shawnee. Thanks for being here. Luis says, hello there. Lennon says, happy Wednesday, spelled an I. That's right. Joey Malone says, I hate that I missed last night, but I watched it today. Was it good? Did you enjoy it? I thought it was a super fun class. This is the class that most people won't make it to, unfortunately. The attendance already here live has about cut in half. It's just the way it works. You have the people who are really, really, really dedicated, which are you. And you have the other people who are just like, I can't get it. I can't quite make it. Oh, man. But you're all here, and I appreciate that. If you're watching this in the recorded version, this is going to be one of the most mind-blowing, epically incredible programs of all time. But first, we got to start with my mission. Our mission is to enrich lives, and we do that by guiding you towards fully achieving and understanding financial freedom. The goal of this series, this day trading series, is to create a sensational tribe of consistently profitable traders who carve out monthly cash flow through day trading. Guess who that is? That's also you. So a little bit about me, since we're talking a lot about you, but something about me. My most profitable day trade ever was on Tesla, September 24th, 2019. I don't personally trade extremely high volume stocks with tiny average daily ranges, like Nokia, Bank of America, Ford, AT&T is also on that list. Now, again, I'm not saying that there's no one that does trade it. I'm just not one of them. In fact, tons and tons and tons, literally millions of people trade those every day. They move like 3-4 cents a day, but you can buy them with so many shares. Like you can buy 1 million shares. If it goes up 3 cents, you know, congrats, high five. Doing pretty good, right? But that's just not my thing. I don't really trade those stocks at all. So Dale says, these classes helped me with a Twitter trade today. Nicely done, Dale. Tell me all about it in about 15 minutes. When you start getting into the R's, I'm going to ask you how you did. Matt says, a lot of profit taking today with Tesla. Yes, indeed. I sold everything at open on Tesla today. Now, here's another cool little factoid. The daily average true range. So this is an indicator that you can get pretty much anywhere. The average true range is a great indicator of how far a stock might move during a day. It helps you either A, avoid the trade, B, hold the trade longer, or C, bail early for a small win. If you're getting in and you're like, wow, this stock has already moved 2 times its average daily range. So if you ever want to practice with a cool little indicator, that one can be nice just to watch and kind of go from there. And of course, you all know my magical beard. It has powers of its own. That's really how I trade so well. It's all the beard. Beard presses the buttons. If you want slides, obviously text the word Newsome to these numbers. Take a screenshot of it. And we're moving on in 5, 4, 3, 2, 1. Ross says, my beard has the same. I like it. So right now we're at module 3, the math of how to become a full-time day trader. That's where we are. We are here at the math, how to become a full-time day trader. The math is the important part. It's also really easy because it's 2nd grade math, but this is a class that no one really is going to talk in depth or as in depth about as I will tonight. And like I mentioned in module 1, unfortunately, a lot of people won't make it to this class, even though it is the most crucial. They're going to watch class 1 and go, got it, know everything I need to know about day trading. They're going to go day trade. And then they'll, do what I did, probably lose some money, and then they'll start educating themselves. It's just natural. It's okay. Not a big thing, not an issue, not a challenge. But I really, really am extremely happy that that we're all here together. Luke says, shout out to Simon, reminded me to watch the interpret volume video on YouTube, and that helped me on our trade on Zoom. Thanks, mate. Yeah, Luke. Man, so much love in this community. I love it. It's incredible. You guys are all so kind. That's one thing that I really love about the real life trading community. If anyone gets a chance to be a part of it ever, to subscribe and join the active day trading room that we have, the swing trading room, it's really the most positive place I've ever been involved with. Simply incredible. All right, so here we go. We're in it. We're here now. Profitable day trading and monthly cash flow generation comes from amazing understanding of second grade math. How is that for a powerful statement? Most people taking this course are doing so because they want to make loads of money. I mean, duh, right? Why does anyone work or do anything ever? Like spending time to work on something is probably because you want to make a little bit of money, because money is awesome. Money is an amazing amplifier of who you already are. And you are probably, likely, an amazing human being, and you want to give generously to your community. You want to help your family. You want to travel the world. You want to give and make sure that your children and grandchildren are set up for life and don't have to struggle. Am I right? Am I getting close? That's why we're all here. Yeah, money can all help with that. We are addicted to the stock market. Everyone who is here watching this, the chances of you just being fully addicted, type in a 1 if you're addicted, you know it. All right. We're an SA, Stock Market Anonymous. And there's nothing you can do about it, right? You sit down, you talk about it, you think about it, you dream about it. It's okay. You're around people who are addicted to this stuff. I love real estate. I'm a huge fan of real estate. There's amazing opportunities in real estate. I normally travel to real estate conventions when they start talking about incredible 18% return on a yearly basis on some really incredible real estate opportunities. And I think, man, I used to do 18% in a month sometimes. So the thing is, the stock market is a liquid thing. It's not tangible. The reason, in my personal opinion, that so many people do not trade the market and are scared of the market is because realistically, how long has the US stock market been around? Do you guys know? About 140 years, give or take. Late 1800s. Now, you might think, oh, that's a long time. Is it really though? That means your grandparent or your great-grandparent, that was it. That's the only people that was exposed to the market, right? And the US stock market is the biggest market in the world. Some of the markets were even less older than that. So, I mean, really, that's like 2 generations worth of time. Now, the reason that people are not afraid of real estate, the reason that people love real estate is because you can touch it. It's tangible. You can go and look at your house and sit in your house, and you can force appreciation in real estate with enough money and enough time and enough knowledge. You can force appreciation. And I'm not saying you can't theoretically force appreciation in the stock market, but what I'm getting at is most people are mystified, mortified, terrified, and petrified about the stock market because they just don't know, and no one's ever taught them because it's only been around for a certain period of time. Everyone throughout your entire history has owned some type of or lived in some type of property. Am I right? Doesn't matter if it was a single wide trailer jacked up into a bunch of trees. You lived in something. So you had these homes that you lived in, and your grandparents and great-great-grandparents 700 years ago, whoever all the way back in your family tree, they lived somewhere. So real estate and or the idea of buying a property and it appreciating in value has been around for a very, very long time. The stock market sounds like witchcraft. Wait a minute, you mean I can buy something that doesn't actually theoretically exist and I own something that other people also own. And if other people buy enough of it and demand it, it goes up in value, and I can sell that value and actually make currency by pressing buttons. What? That's why we have to start helping other people learn this, my friends. We got to teach everyone that we can that this is not a scary environment. This is something that can actually be legitimate. And what's really exciting is this can be a career for people. This can be a legitimate money-making venture for a lot of people. And you have to, first of all, believe, my dear friends, that you can make a lot of money in the stock market. But it's not about how much money you make. It's about how much money you lose. Because if you made $1 billion between now and Thursday afternoon, and then you lost $1.3 billion by Friday, how are you doing? Right? So you can make as much money as you want, but you can also lose that money. It's the losing of the money that is key, and that's why we're here in this class. My best advice, because most of you might be here a little bit newer to day trading, do not focus on the money or the time, because it's going to take more time than you want. I got this text today, 17 minutes ago. Hey, Newsome, I have a $25,000 account. I'm doing this particular type of strategy. Can I make $1 million by next year? Question mark. And my reply was, nope. No, you cannot. Sorry, I don't care. I'm not trying to sell you a package or a product. You will not make $1 million off of 25,000. So enjoy. Cabria says, if you got Tesla options in March, LOL, you would have had to buy a lot of them, and they would have had to been out of the money. Very, very far out of the money. So you'd have had to risk the entire $25,000 on out of the money options that were extremely far away. It can happen. But the other interesting part was that particular person that was asking that was not buying directional options. They were selling credit spreads, right? So credit spreads have a limited return anyway. So if you're going to make $1 million off of $25,000, and I've made millions, right? I have 7 figures. I know it can be done. I'm saying that the way you're going to make millions is you're going to have to play directional, unlimited return positions, right? Buying a lot of stock or buying a lot of call options. And then, of course, you got taxes, right? And we're going to talk a little bit about that actually today. So anyway, long story short, my dear friends, you can become extremely wealthy doing anything. Type a 4 into the chat pane if you know an extremely wealthy chef. Someone who creates food for other people, makes a lot of money. Okay? Type a 5 into the chat pane if you know someone who is extremely wealthy because of playing soccer. Right? There, you can get, type in a 9 in the chat pane if you know someone who makes a lot of money swimming very fast. Okay? You can become extremely wealthy doing anything, but it will take you longer than you expect, and you're going to want to quit at some point. It's only those who never quit that will eventually reach that goal. You will want to quit. You're going to wake up one morning at 4:30 in the morning. You're going to be tired. You're going to be sore. Your mouth's going to be dry. Your legs are going to hurt. Your lower back's going to hurt. You're going to have these crazy bills. You're going to have these crazy stresses. And you're going to go, I just want to sleep all day and not do anything at all. That moment's going to come into your brain, and you're going to have to push past it. It's going to occur. I've been there. You've been there. We've all been there. Jeff Bezos has been there. Mark Zuckerberg, Warren Buffett. Money does not make it, does not alleviate that fear or that pain or that frustration or those days where you're like, I'm just sad and frustrated and annoyed and upset. You need a why. You need a pull rather than a push. You need to be pulled by your dreams rather than pushed by your problems. So you cannot quit. It will click. It's going to take time. It's going to take longer than you want. And it is absolutely achievable. You have to believe it. And once you believe it, you can work hard enough towards it. And if you work hard enough towards it, it'll be yours. And I will say this, I doubt anyone who has a very, very small account has made it all the way to this particular class. But if you don't have a lot of money, it's a little bit harder to trade. Protecting your capital should always be your #1 priority. So I'm going to talk a little bit about this bullet, this little page right here, because I feel like this is really relatively interesting. If you start out with a $50,000 bankroll as your trading capital, as your trading account, all right? So let's say you start off with $50,000 and you grow it 0% over 5 years. So year 1, 0%, year 2, 0%. You've done absolutely jack squat. You made no money over 5 years of time. What do you think is going to happen on the 6th year? Right? There will be, I mean, you don't lose any money. You're going to get it. It's going to click. There will be a trade. There will be a setup. You will have 5 years worth of knowledge. And then how quickly you can turn 50,000 into 100,000 is staggering. That can become year 6 easily. And then year 7, you turn $100,000 into $190,000. So let's say 7 years, you took a $50,000 account into a $190,000 account. Now, how are you feeling about that? Is that better? Jay says the average account doubles every 9 years. That is correct. At best case. So the reason I'm bringing this up is don't be stressed out about how long it's going to take. If you do start trading and you're not making $475,000 a month when you first start, it's okay. It's all right. Give it some time. Don't stress about this number. Figure out the process so that you can become methodical and you can understand the why. And it might take you 5 years. It took me about that, right? To really, really, really get over all the humps. And again, if you want to know all my story, check out the Broke to Woke podcast. But the goal of the overall process of trading is about getting the process down, because each and every one of you, who's the oldest person here in the chat pane? You know who you are. Type it in. As far as age, all right, what are the numbers? All right, we got a 68er in the building. Nice, nice. Can anyone beat 68? We got a 67. We got a 77. All right. Can anyone beat 77? Now, Matt, I'll be less mean to you as we text each other. I'll be nicer to you, Matt, now that I know you're 77 years old. I thought you were 25, man. You should have told me you were 77. Like, why cannot Matt figure out this technology issue? Now I know. But hey, I love you, dude. High five. So Matt is 77 years old. Okay. Now, the cool part is my boy Matt is a really good options trader. He's been doing a lot of options trading. He's been texting me back and forth. He's a very avid options trader, focuses primarily on Tesla right now. The reason I'm bringing up the age thing is because the vast majority of the age situation in the chat pane was about 50-ish. That was the average, was around 50. That means that you have another 50 years of money-making opportunities. It's a long time, because age is getting better. Health technology is getting better. Diets are getting better. Food's getting better, so on and so forth. You got another 50 good years ahead of you. Be thinking like that. If you think you're going to die at 78, you're going to die at 78. Just letting you all know. If you tell yourself that you're going to live till that age and that's it, and you keep telling yourself every day, you're going to nail it. Now, again, that's minimum. Maybe you have another 75 years left. I don't know. But you got plenty of time. Plenty of time. So once you learn the skill and you absolutely nail the amount of money, you really, really get a good bankroll going, you can do extremely well in trading. The larger the account balance, the more you can do on a monthly basis. Michael asked, how much money should you start with when you first start trading? I usually tell people 3,000. Like that's the absolute bare minimum. You can trade with 3,000. You can obviously trade with less than that, or you can accumulate, but I don't really say you should trade with less than anything under 3,000. If you're here and you have a $1,000 account, just buy some stock and hold on to it for a while. Right? But if you are in a day trading class, so with day trading, it's going to be hard to really, really do anything super effectively with 3,000. So for me, the magical number is 30K. I think if you can hit 30K, you can do a lot, because I definitely know you will be above the pattern day trading rule. I realize that some of you might say, man, $30,000 is a lot of money, dude. Well, you know, it is and it's not. I fully, absolutely, completely think that every single person here has access to $30,000. Now, it might be in an IRA, it might be in a 401k, it might be in your home equity line of credit, it could be on a credit card somewhere, it could be, you know, silver buried in your backyard, a business line of credit, friends, family. You got access to $30,000. The Korean mafia, you can sell your blood. Listen, I've gotten the money before. Okay, you can get the money. The money is there. Money grows on trees. So just go get it. Like $30,000 is there. For the vast majority of you, I can help you find $30,000. If you're like, there's no way, I don't have it, call me. I doubt you don't have it. You'll get it. It's somewhere. Now, is it expensive money? Maybe, right? If you have to put $30,000 on a line of credit from a credit card, like a cash advance, probably shouldn't do that, but you can. Would you guys agree? I would not, by any circumstance, suggest getting a cash advance from a credit card to day trade or to do anything in the stock market with, but it can be done. I've done it. Don't do it, but it can be done for sure. Absolutely. But don't. So the money is there. Brent says, what about your program that if you put in 3,000, you stake 25,000? Yep. So you have that, but again, you're still using that 25K. Right, Brent? So you're still getting that leverage. So other people's money is always a better way to play, but that's why the $3,000 is kind of like a minimum investment. But that money, once you put that money in, it's pretty much toast anyway. So you need money. The more money you have, the better, always, when you start trading. So remember this bullet: the less you trade, the less you lose. Let that sink in. Say that to yourself every day. Because trading should be relatively simple. Just buy some really good companies and hold on to it for a while. Doug says, no car payments, buy a beater and invest the monthly payment. That would work too. Yeah. So the less you trade, the less you lose. Just trade small in the beginning, because day trading is time intensive. You will spend about 2-3 hours a day trading. It does require actual work and brain power, but once you practice the habit, I don't know, 7 hours a day, 5 days a week for 2 years, you will have spent $3,500 hours and you will be leaps and bounds ahead of the crowd. So what do you guys think? Type in a 1. Does that sound like a relatively decent, realistic expectation? 7 hours a day, 5 days a week for 2 years. Yeah, do that and you're going to do pretty okay. You'll be in a spot where you're going to at least get it. You'll at least understand it. You'll have some knowledge behind you. That's why most of my clients, customers, and demographics are around 50. The people that buy the Lamborghini Martini bikini type of like marketing and advertising are generally 40 and younger, because they haven't really been burned that bad. By the time you get 50, you're like, yeah, that's a bunch of giant pile of orange juice. All right. I'm not going to buy a $3,000 program, invest $9,000, and then have $1 million by next Saturday. Like, it's not going to happen. You know that's not going to occur. It just won't. So if you're doing this, you're building up that repetition. Phenomenal. But day trading is relatively time intensive. The 2 to 3 hours does not have to be at once. right? It can be 30-minute blocks, 30-minute block, 30-minute, 30-minute, 30-minute. You can spread it out over the day. That's usually what I do. So when I'm trading by myself, I go pretty hard in the paint for the first 90 minutes, and then I come back later in the day for another 90 minutes. And that's usually how much time I spend day trading by myself. Like if I'm not in the room or anything. When I'm in the room, I go hard at it for 3 hours nonstop, pretty much, market 9 a.m. Eastern till 12 a.m. Eastern, 12 noon Eastern. But anyway, bottom line, guys, this is like anything else in life. I know I've been spending a lot of time on this, but it's like everything. Nothing happens overnight. It's all about consistency, small building blocks. The best way to eat an elephant is one bite at a time. The best way to build a house is one brick, one piece of wood. Stack that wood. Get it in. Give it some time. Give it some time. So here we go. We're going to go over the 4 M's. The 4 M's. Mitigation, math, margin, and momentum. Here we go. Mitigation is boring. Risk mitigating is boring. Nobody wants to talk about this. Everyone wants to talk about money. Now, if you don't like risk mitigation, think about it like this. You know what else is pretty boring? The brakes to your car. No one ever brags about how fast their car can stop. I've never met a friend who was like, man, I was driving the racetrack the other day and I was going 100 miles an hour and I went from 100 to 0 in 4 seconds and it only took me 43 feet. Okay. No one in the bar or your Christmas party or whatever talks about how amazing their brakes are. They always talk about how fast, how much torque, 0 to 60, whatever. But try driving without the brakes to your car. Not really. Don't really do that. But guys get what I'm saying? So that is the goal and the objective. That is the approach. That's the theory. That's the thought process. That's the advantages. It is boring. Everything is boring. Safety is generally boring. This is safe. Okay. My quote that I love, trading is simple, just difficult. It's like walking 1,000 miles. For the vast majority of people, walking is pretty simple. But walking 1,000 miles is not easy on any time frame. A day, a week, a month, even a year. It's not simple. So keep that in mind. And now we're going to get to the R's. Now we're going to get to the R's. Here we go. I'm sure you're very familiar with the concept because I talk about it in the beginner series. I talk about it in the intermediate series. I'll talk about it everywhere on real life trading. We have articles and articles. We have videos and videos. We have everything about it. I'm not going to go into massive detail on how to calculate it, but I'll glance over it. You're probably very familiar with it, but just in case. R stands for risk unit. This is the amount of money that you're going to risk on any trade, specifically since we're talking about day trading, any day trade. 1 R generally equals a % of your portfolio. It can be 0.05%, it can be 0.5%, 1%, 2%. You get to choose what that % is. But it is a % of your portfolio that you are risking on any given trade or day trade or investment or whatever. Knowing your risk. Most people agree that it should never be higher than 2%. And again, on a day trade, we are talking about day trading. I will risk more than one specific R for my longer term investments or a longer term trade or something I'm really, really comfortable on. But if it's a day trade, I don't risk more than an R. Right? So again, the goal and the objective, know that number, keep that number consistent, and have that number. So you pick your R, it's usually 2% or less of your account. So again, let's say you have a $50,000 account and the R, this is the formula right here, is the difference of your entry and your stop, and divides that out and it gives you the amount of shares to trade. So if your R is 250 based off of a $50,000 account, and let's say you're getting into a trade at 13.19 and your stop loss is 11.19, that's a $2 difference. So it will be 250 divided by 2 equals the amount of shares that you would take on that particular day trade, right? Or 125. So it'll be the amount of shares. So when you're taking a day trade, you can have a really, really good understanding of how it plays out. If you're playing options, it's the exact same. So if you buy an option for $4.19 and you analyze and determine that you want to put a stop at $3.19, right, that's $1. So if you have a $250 risk unit and you divide it by $1, that's 250 shares. You can't buy a half a contract. So when you're buying a call option or put option, you can either buy 2 or 3 call options. If you buy 3 call options, you're going to risk a little bit more than 250. And if you buy 2, you're going to risk a little bit less. But that is the math. It's the same thing. Options have numbers just like stocks have numbers. That's a Jeremy Newsom quote for you. Everything has a number. So if you know the numbers and you can see the numbers, calculate it out and do it. Diego says, how many trades at the same time, the same risk? It's up to you. But when you're day trading, generally 3, maybe 4, maybe 5. But it's not a massive, massive number when you're day trading. Again, when you're swing trading, I will have swing trades and day trades. Because again, the cool part about day trading is it's a day trade. So you're in and out the same day, right? You're in and out the exact same day. That's what's cool. But as you know, you can do swing trades and day trades combo. And for me, I generally won't have more than 17 open at any one given time. So that's swing trades and day trades. So it's like, let's say I have 13 swing trades open, some bullish, some bearish, some with stops, that have already increased, some that are already profitable, so on and so forth. Then I'll have 3 or 4 day trades open, and that'll be a total of 17. But I really don't have that much risk exposure on swing trades and day trades at any one given time. But again, it's all something good for you to talk about. Thomas makes a very good point. He says, another thing we've talked about is that when you first start, you're probably the worst you'll ever be. So there's no rush to have a larger R. It's a very good point. Many traders, they start out, and let's say you start out with whatever, again, $40,000. And they go, okay, cool. Well, Newsom says 2% or less. So I'm going to go with 2%. And I'm going to make it $800. All right. Newsom said $800 risk. So again, when you first start out, you're initially going to go, okay, cool, 2%. Newsom said 2%. Here we go. And when you first start trading, you're going to be terrible. You might get lucky here and there. I mean, beginner's luck is a real thing. But Matt DeLong, who's now the chief technology officer of Real Life Trading, was the 3rd worst trader of all time. I think he got his medal. I think the Chicago Board of Options Exchange sent him an actual medal in the mail for being the 3rd worst of all time. It was a bronze medal, but Matt says, I thought I was the 2nd worst. So it was not good. Philip says, who's number 1? I think I have to take that title. I think I have to take it. It was not pretty, man, the first few years of my trading life. But long story short, you do want to start a little bit smaller, right? When Matt first started trading, not only did Matt not know what an R was specifically, but he also didn't know what this number was. And I think he lost like 16 grand on one trade on accident. I think it was on Amazon or something like that. It was a large number. He bought a little too many shares and was like, oops, and then was like, meh, and it pooped his pants. And Matt, if I'm harping on you at any point, you can come on here and save yourself. But Matt said in the chat pane that he's really good at figuring out what not to do. Yeah, and the thing is, when we talk about margin, right? Some of you might think, oh, well, why didn't he just hold the entire time? Because if you have too much margin and the stock starts going down too fast, you will get what's called margin called. We're going to talk about that in a little bit. And you start getting margin called, the broker will force auto liquidate you, and then you sell anyway for a much bigger loss. All right, so this is the risk, right? The risk profile. Start with a smaller risk when you first start out because you can always increase it. Ah, gotcha. Matt says, I was short Amazon that day. Ah, you guys automatically thought he was long, didn't you? Just because I drew the arrow, you thought that was his P&L, not the stock. He was short Amazon. Ah, see? See? All right. Long story short, got to have a good risk in place. Now, there is something called the Pdt Rule. We talked about this some in many other classes. The good news is this is mostly to my knowledge, a US rule. So if you're not in the United States, you can plug your ears for a little bit. But the United States has a rule that says if you have $25,000 or less in a margin account and you take 3 round trip day trades in a 5-day period, you will have your account frozen and or flagged. So again, it's kind of a less than awesome rule. It's generally not the greatest thing ever. I don't love it, but it's there. And you must know that it is there. So there are a few ways to get around it. I talk about it in many other different videos. One of the easiest ways to do it is have a cash account. So there's that. If you have a cash account, you just day trade until the cash is gone, which is real simple. You take like 2 trades and then poof. You can day trade options, which is literally the hardest thing you can do in all of trading. I mean, there's nothing harder to do than day trade options. That's the pinnacle of difficult, but you could do that. Or you just stay in margin and take trades on Monday, take trades on Friday, take trades on Wednesday the next week, then you take a trade on Tuesday the next week, and then Thursday the next week, and just kind of spread out your days over 2 or 3 days at a time. So that way you don't have any multiple round trips. Mike says some people open up a few different accounts with few different brokers. That is true. You can do that. I know one person who had a $7,000 account, $7,000 account, $7,000 account. And I was like, bro, why don't you just have all that money in one account and then do some overtime at work and then put 4,000. You know, just put it all in one. But anyway, I digress. You can do that as well. That's another thing you can do. Okay, there's tons of ways around it. The easiest way, go make more money. It grows on trees. It is everywhere. Money is very, very easy to come by. So just go get more. Go create more. Go add more value. Go work overtime. I had $25,000 when I was 20. Like, it's not hard to get. If you're in America, money is not the problem. You can go get the money. You can do it through trading. Exactly. Right? You have a $12,000 account, buy some shares of a really good company that's going to go higher over time, #Tesla, and grow it up. I mean, it doesn't matter. You can get there. It is extremely achievable. So that is the pound and day trading rule. And it is a real rule. If you live in Canada, though, you don't have to worry about that rule. So cool. You know, it's pretty nifty. The smaller your account, usually the larger percentage might be initially. Growing a small account, which is less than $30,000 with day trading, is very tough to do in a short period of time. Keyword, short period of time. It can grow, but everyone who has, let's say, a $20,000 account, you want that to be $40,000 before your birthday. And you're like, I want to buy me a new Maserati in cash. Okay, well, don't really do that because those cars appreciate very quickly. Number one. Number two, if you want to double your account by day trade between now and your birthday, it's going to be very, very hard to do with day trading, especially if you're under the pattern day trading rule and if it applies to you. It is possible. It is achievable, but it's going to be extremely difficult. Give it time. I know I keep harping on these subjects over and over and over and over and over, but again, it's free content. And I want people to realize that they're just sitting here watching it for free. I want them to be safe. I want them to be cautious. If you want to trade with a very aggressive strategies and grow very small accounts quickly, do coaching sessions with me. I'll give you strategies on how to do it. I can give you a trade setup in a coaching session that I will do with my own money, and it's a 300-400% return on the upside and a 40-30% decline if it doesn't work. Have 3 or 4 of those, and you can double an account. I've doubled $20,000 accounts frequently. It's not hard to do. It's really easy if you know what you're doing. If you spend the time, you know the risk, you know the patterns, you know the setups, you know the plan. I mean, Edward, we could have put $20,000 on that Spotify trade that we did 3 weeks ago, and we would be at what? $36,000? You know, I mean, we would have made 16 grand off of this $20,000 account in 3 weeks with a long-term option on a really, really easy trade. So if you know what you're doing, it's not hard. It just, there is a time and a place and a strategy and a setup. Brett says, how do I sign up for a coaching session? Ooh, time for a harmless sales pitch. Go to reallifetraining.com and just click on mentoring. So I'm not the only person who can do this. There's plenty of people, but go to reallifetraining.com, click on mentoring, and either connect yourself with a group of 2 to 6 other traders from around the world and do weekly coaching sessions with some of my best friends, proteges, trading buddies. It's $3.99. You get it one-time payment. You have 8 weeks every week for an hour and some change with either Tracy Ball, who is Canadian, Tony, who lives in Utah, Robert, who lives in Boise, Johnny Guarco, who lives in Hawaii, and then Dan Jansen, who lives in Philadelphia. Or if you do want to work with me, click that little button right there, personal mentoring. It's really not as bad as you think. Edward says, when is Thomas Wong going to be a mentor? He is next in line, my man. He is next in line. Cabria says, are you more expensive? I am, only because I've been doing it for a very long time. I've been working with traders and coaching with traders and helping traders and trading, and I've just done it a very, very long time. So yeah, it's worth it. All right, so here's what we're going to do. Here's how it works. I'm going to give you the math of the realistic day trading for your first 3 years. Now, this can depend on a megaton of factors. How good you are, how dedicated you are, how much time you put in advance, how much you studied, how much you back trade, how much capital you have, how naturally good you are at this, how risk averse, how aggressive. There are so many factors. But what I can say is, if you can't do what we're about to look at, this should be your goal. This should be your expectation. This is the part of the class that is literally spellbinding, because I'm going to show you what I expect from myself every single month. And if you can do this, you can make some amazing money, because if you do this, you can do so much better. This is your realistic expectation. Again, you can absolutely do better than this. But this should be your baseline. So here we go. Let's start out. Market opens on Tuesday, right? There's no Monday. This is the start of a brand new month. Brand new month. Market opens on Tuesday. You take 2 trades and you get 0.3 Rs. Cool. Now, do you keep trading? No, you take 2 trades. Wednesday, man, why do calendars spell it with an E? It's just annoying. So Wednesday, you take one trade, and you take 0.8 Rs. Now, a really simple question to answer. Jeremy, why would you sell at 0.8? And the answer is because if you combine these 2 numbers, you have now more than your risk. Boom. right? You combine those two numbers, you got 1.1 Rs. That's it. You now, every single time you risk on a trade, if you do that for the very, very first part of the month, you should end profitable. How crazy is that? If you go up in the early part of the month, you should end profitable. And if you don't, it is your fault. Because you traded too aggressive, you got too financially zealous, too monetarily optimistic, and you played trades that you shouldn't play. You traded too frequently. You got too aggressive. You didn't sit back and relax. You didn't play defense. You didn't stack that wood. You played way, way, way too much. So the next day, right, you're on a 3 for 3. So when I say 2 trades, I don't know if you won on one and lost on one. It doesn't matter, right? The net result was 0.3 Rs. So you stopped on the day. Be honest with me. Type a 2 into the chat pane if you have gone realized profitable on the day for your day trades to end realized negative. Okay? I've done it before in the past, but I no longer do it because it's dumb. That is the most noob mistake any of us can make. If you take 2 trades and your net result of 2 trades is a small number, be done for the day. I don't care if it's 30 bucks. You're like, okay, well, I made 30 bucks between 2 trades. All right. Be done. Because if you're like, oh, but I could make 100 or whatever your amount is, I could make 300 or 1,000. I'm not saying that you won't get there. I'm certainly not saying you can't have 20, 30, 40, 50 R months. It is extremely possible. What I'm saying is make this your baseline. Make this your expectation. Because on Thursday, you take 1 trade, bang. You're up a little bit on the trade. You see any kind of reversal signal, any reversal signal that you want. Anything. It hits a target. It moves too fast. You don't like a candle, whatever. Boom, you get out. 1 single trade. You just went from 1.1 to 1.5 Rs for the month. And then you take a trade on Friday and you lose -7. So you're at 0.+8 Rs going into the weekend. So the weekend, you back trade and study, you back trade and study. And then on Monday, you take 3 trades, 0.67 Rs. Right? Good old 0.67. So now 1.47 Rs for the month. All right. The next day, you take some trades, you lose 0.67 Rs. All right. Good try. Okay. So you're at 1.47 and now you lost 0.67. So what was that? 0.8 Rs. So you're at 0.8 Rs. Plus 0.3, you're back at 1.1. And then 0.67. What's really interesting here, this is really important to know, is at plus 0.67, if you do that, you are now at 1.77, which is the highest that you've ever been so far. So what you could do is just take the weekend off, but you don't. You take some trades anyway, and you only lose 0.7 Rs. Why is that such an important figure? Well, because now, even though you lost 0.7, you go to the weekend, you're still up an R. 1.07 Rs. You still have a full R of risk that you can lose the next trade. And what do? You don't trade it all on Monday. Why? I don't know. Maybe you slept in. Maybe you hung out with your spouse all day. Maybe you went for a run. Maybe you went for a bike ride. Maybe you walked around the park. Maybe you read a book all day. But you didn't take any trade. So you take another trade and you lose an R. So now you're relatively at break even. You take 2 trades, you're up an R. You take 2 trades, you're up an R. Now you're at 2.2 Rs for the month. Lose on Friday, lose 0.7, and you're at 2, 1, 12, 1.5 Rs for the month. Back trade, you back trade, you take another trade on Monday, you lose an R, you're at 0.5. You don't trade again because you're on a little bit of a losing streak, right? 2 days of losing streak, so you practice, you practice, you practice. You take 1 trade, it starts working, and then bang, you get out. Why would you get out at 1.3? Who can tell me the math behind this? It's really, really simple. Why would we take, without even looking at the trade, I can tell you that we would take, that would exit at 1.3 Rs. Why wouldn't you hold for 2 Rs? Well, whatever. Why would you exit at 1.3? It's a really, really easy answer. It's the highest that your account's ever been for that month. 1.3, now you're at 2.8. We've never hit 2.8 before. Stacking those gains. Right? Ethan, phenomenal answer. Thank you for getting that correct. That's the highest that you've been. Is this starting to make sense? I don't even have to know what trade it was to know that I would have taken the profit. If I was up at any point on that trade at 1.3, I'm like, well, let me just take it off there. Let me just be done. So then same thing, you take another trade for whatever reason, 2 trades, you take up 0.3 Rs. Again, now you're at 3.1, highest your account's ever been. You take 2 trades on Friday, you lose 0.76. Then you go up, then you lose very, very small, and then you take 3 trades and you win. So the net result, can someone do that math for me really quick? But the net result on the entire month, 2 and some change, I believe. And if you're sitting there and you think that that's not a huge win, it's not a huge win. It is a win. It is a confidence builder. It's a lot of time in front of the screen. It's a lot of progression. It's a lot of mental maps that were created so that you can know what patterns are and what to look for and why you like them and when you should get out of a trade early. And Pam said earlier, looks like you shouldn't trade on Fridays. So you're starting to get, I mean, Fridays are my worst days. I either lose like a drunk sailor or I win like I'm money making Floyd Mayweather. It's like feast or famine on Fridays for me, which is cool. It's all good. But I could do extremely well never trading another Friday again. I could trade just the middle of the week and make tons and tons and tons of money. So right at the end of the month, you're very close to 3 Rs, right? 3 Rs every single month is incredible. All right. It's not a dramatic, amazing, huge win, but it gives you progression. It's 36% annually. $36 annually, not bad. As you learn this system, because remember, a lot of you are young. And by young means you're less than 90 years old. You're young. So as you're young, you're building confidence. You're building the fact that you can do this. You're like, oh my gosh, I actually went to battle with hedge funds and market makers and Jeremy Newsom and Philip Williams and Edward and Andre, and I'm going to battle with other professional traders, and I won. I made money at the end of the month. It's like you playing any sport and getting paid for it. It feels good to know that it's actually possible, because if you can just put one winning month together, you know that you can do it. And if you know that you can do it, you begin to build this confidence and you'll believe in yourself, and everything can start to change at that point. Tanya says, it's like taking a college course and getting paid. Absolutely. I love that. So again, here's just a really, really quick screenshot. This was just right off of our community channel. Varian talk about his trades, 47 Rs for the month. 47. Kevin Stone, look at this, just stacking this wood. 1 R on shop, 1.2 Rs on this, lost negative 0.37, lost 0.76, finishing the day 1.07. What a classic real life trader that is. That's amazing. Look at Jay over here, 33 Rs for the month. My friend, that is life-changing money. If I make 33 Rs in a month, which I do, at least 4 or 5 times a year. I mean, that's an amazing, amazing, life-changing amount of money. And look at Mike over here, just building his wood, building his house of prosperity, his palace of peace. 2.6 R's, 1.6 R's. There's a loss. 3.26 R's for the day, 27 R's in August. Amazing. John Alonzo got 1 R on a trade. Andrea, who's in the class right now, 1.2 R's on trade. 8.2 R's for August. Great job, by the way, Andrea. Amazing, amazing work. She lives in Montreal, Canada. I've met her. I've hugged her. Such a beautiful, spirited person. But 8.2 R's is sensational. Because you know what? Really quick story. She wanted to give up. It was either back in June or July. She was stressed, annoyed, frustrated, upset. And I think at the end of the month, she made like 1 R's or something. She was so mad. She was pissed off, frustrated. She was either breaking even or like she made almost no money. And then the next month, bang, good old 8.2, legendary status. And here's the cool part, folks. The thing I like about R's, you don't know what people's R's are. I don't know. I know some of people's R's, but I don't know what everyone's R's are. We have 6 traders that I know of that have a $10,000 R plus. We have at least 6 that I'm aware of. We could have more, but we have 6 who have a $10,000 R or more. So when they're posting a $30,000 R or 33 R's in a day, that's 30,000. You know, that's really cool though. But I mean, let's be honest, is $1,000 as a risk unit, is that still pretty good? I mean, if your boy Varian closed 47 grand in a month, yeah, it's not bad. All right. What about this? Some other quick screenshots. Again, Ross, 6 R's on Beyond Meat, 1 R's on Fastly, 2 R's on Tesla, 9.5 R's for the day. Finishing this month positive is priceless. Thanks, team. Wouldn't be able to help it. So, and then look at this. Immediately, right after that post, you get a bunch of people giving him some love. Here's your boy Edgar. This is a really, really good, super cool testimony. So Edgar says, last year, June 2019, I joined another trading group and room, and I lost a total of 40 R's in 1 month. Now, when he says 40 R's, trust me on this one, he didn't know what R's were at the time. So he's calculating how much he actually lost trading in that trading room. Now, I'm not specifically saying that Real Life Trading is the only trading education company that's going to help you make money. I'm not saying that. I will say that we're the best, but we're not the only company out there that can help you make money. There's tons of traders who are better than day traders than I am. So many day traders that are better than me. It's not even funny. But as far as a community, someone that's filled with positivity, love, altruistic beliefs, there's no one that can be Real Life Trading. And so Edgar loses 40 R's is hilarious. He says in 30 days, 20 working days, he loses 40 grand, 40 R's. I left that group. I stopped trading for almost a year. I focused on my regular job. Goodbye to financial freedom. 4 months ago, May of 2020, I decided to join Real Life Trading. Today, after 4 months of trading, I'm 40.57 R's up. The dream is back. How cool is that? I mean, that is so cool. 4 months later, gets it back, and now he can do it all the time, over and over and over. And again, look how many amazing people just came to this post, flooding him with great comments. Scott McKay, who I think has the title for the 9th worst trader in the world at one point. He has his badge of honor somewhere. And then Danny, right? Sochi, just such a beautiful, beautiful spirit. You probably got a phone call from her at some point. Simon. Edward says, am I the 6th? No, man, I don't think you're good on the list, dude, as one of the worst traders. Sorry. I don't even think you're on that list, brother. So again, just a really, really positive thing. Here's what I think some months should look like, might look like. Let's talk about okay scenario. Again, not even amazing scenario. Let's just talk about good scenario. One of the things I do when I work with traders, if we work together a lot, like multiple sessions over many months, is I help them design their perfect day. You know, so what's your perfect day look like? And so we kind of create eventually your perfect day and kind of schedule everything out and just kind of talk about it so that you can work backwards into what your perfect day and perfect life looks like. But let's say on Tuesday, you take a trade, boom, one trade, 1.8 Rs in it. Next day, one trade, +8. So killer, 2.6, thank you. Take another trade. Why would you exit at 0.4? For whatever reason. So you can be at a nice crisp 3 Rs. Whew, killer. And then what do? Go on vacation for 4 days, right? Let's go hiking. Let's go sailboating. Let's go do something cool. But you take off, you go enjoy. You don't spend that much time. And then check out Tuesday again, all the vacation, you take 2 trades, you net 0.6, right? And then you take 2 trades, you net 0.3, you take 3 trades, right? Again, you're still losing on some of these trades, but you're winning throughout the day. So you do it again, and then boom, 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 you lock it in. You take another vacation, feeling good, up over 5 Rs now. Then you take a trade on Tuesday, you lose. You take a trade on Wednesday. Why do you close out at 1.1 Rs? Why would you do that? 2 trades, 1.1, because it's more than you just lost on that previous trade. And it's the highest that you've been. You guys starting to see the point? You're being positive. You are stacking the wood. I don't even know where that expression came from, but it's funny. So you're up so far for the week. Between Tuesday and Wednesday, you're up plus 0.1. And then on Thursday, you take 2 trades, you win 1.1. And then on Friday, you lose -0.7. Monday, right? Check this out. Sunday, you did a back trade study coaching session with Newsom. Robin, that's funny. Thank you, Robin, for putting that in there. I appreciate that. So that just cracks me up. So Robin, we do a coaching session. The very next day, bang, you have your best day ever, 1.9 Rs, which is reasonable. That's reasonable. So what happens after you have your best singular day ever so far? Right? No trading. You're not even on vacation. You're just not trading at all. You just don't take any trades. And then bang, and then bang, and then Fridays you lose, and then boom, 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 and you end the month 9.6 Rs for the month. How cool is that? That's what a lot of my months when I'm day trading, that's what they look like. I'm not being braggadocious. I'm not saying that to like impress you. I mean, I'm impressed by it, but that's all this is what I do. Like, you can take a screenshot. This is Newsom 101. I don't really take that many trades. And by vacation, I mean, you guys know it's not actual vacation. So, you know. But again, once you start realizing that, oh my gosh, I can do this, everything starts coming together and everything starts just becoming so much more opportunistic. And then if you make 9 Rs in a month and you make 9 Rs in a month, you do 3 months profitable, increase your R. Do 3 months profitable, increase your R. And then do 3 more months and then increase your R, and then 3 more months and increase your R a little bit. And keep just slowly grinding towards that level that you want to make it to. So this is generally how I break a lot of my stuff up into. So I have 3 main accounts that I trade from. I have a long-term, so IRA, tax shelter, all that kind of good stuff. I don't have a 401k. I guess I theoretically could, but I have an IRA because I'm 32 and I figure you should have an IRA, right? I have a swing trade account and I have a day trading account. Those are my three main accounts. Now, I also have a few smaller play accounts where I'm allowed to do huge, high risk, huge reward plays where I still mitigate risk, but I take $20,000 and I could lose $20,000 in 3 or 4 weeks, or I can make 60 grand. Like, I'll do that. Like, it's not, again, I don't ever post that stuff on social media. You guys almost never see these insane wins because it doesn't matter. This is not about the money. I don't want to entice people with money. I want to entice people with hard work that pays off. I want to entice people with being able to enrich lives from all over the world by doing stock market trading, pressing buttons, being able to pay off debt, being able to become financially independent and spend time with your family and just travel the world and have an amazing life. But this is how I normally do it. It's what it generally looks like for me. So this is all, long-term, and then I'll blend these two together all the time. I'll trade them and all that kind of good stuff. So what's so cool about margin? Well, for starters, most brokers will give you 1 to 4 margin. So if you have a $40,000 account, you actually have $120,000 of buying power. So what is your R? What would your risk be? Would you base your risk off of 40K or 120K? You base your R off of 40K. The $120,000 is just in case you run into a trade that's a little bit more expensive and you got to drop some coinages. Let's say you're trading Zoom. Like, we took a trade on Zoom today and it wasn't free. We had to put some shares in. And, if you take 3 or 4 day trades at once, you could easily run out of buying power. So if you have 4 times margin, it really, really, really helps. And brokers, as you all know, do charge margin interest to use their capital. But when you're in a position for less than a day, right? When you are day trading, the annualized rate of margin interest is literally pennies compared to what you can make. Thomas, do you even remember what your interest rates were last year, or like what you paid on interest? I mean, I think mine was like hundreds of dollars. It really was extremely, extremely small. So don't let that part stress you out. Craig says it's a joke. Yeah, I mean, it's really not anything that you need to specifically stress about. What you got to do is you absolutely should be in a position where you have to understand risk is risk. Ross says, is there a difference between margin account and portfolio margin? Yes. So this increases it a little bit more. So you can actually margin things that are already in your portfolio. So that's kind of cool. But yeah, it's a little bit more risk aggressive. And again, IRAs and longer term accounts, you can't play with margin, right? You can't do that. Adele says, do you pay for margin if you don't use it? Nope. No, you do not. So you only pay for it if you're in it. It's a phenomenal question. Yeah. So it can be there, and even if you don't use it. But what's really fun, my friends, is this, again, is what scares a lot of people. But if you focus on your risk, and that's why I'm covering it in this class in depth, when you're focusing on your risk, when you're focusing on your 1R, let's say you have $100,000 in an account. How much is that with a 1 to 4 margin for day trading? That's 400 bones, my friends. 400K. Faux hundo. Now, does that scare you? And the answer is no, it shouldn't, because it's still 1R of risk based off of whatever your R wants to be. So if you have 100,000, could you trade a $400 risk unit if you have a $100,000 account? Is that possible? Yeah, again, you can have whatever risk you want. It is obviously your account, it is your money. You can do whatever you want. So keep that in mind. Victor says you need margin for shorting, right? Yes, you do have to have a margin account if you want to short a stock. Yep, that is correct. So you do have to have margin if you are shorting stock. Yep. So if you're trying to make money when a stock goes down, you do have to absolutely have margin. So that's why I think it's not as scary as people make it sound. And I do talk about margin in class, 3, I think, at the beginner series, but it's just all about knowing the risk and knowing the money and knowing the numbers. So you guys remember how I talked about in module 1, I talked about Clive. I talked about the guy who worked in Canada and now is retired, living in Florida, making around $700 a day, trading AMD. Keep that in mind, because as you are trading your risk, big wins can absolutely happen. Buy something as low as you can, have a stop on it, sell it high as you can. Bam. Like that's still it. Like if you do it on margin or whatever, like buy something as low as you possibly can, look at a good price, buy it down there, and then sell it as high as you can. Volume and traps are key. Look for traps. If you can spot multiple traps, play that trade. Play it. Play the setup. Get in. If you can see all the traps that are happening, play it. So let's talk about a trade that I showed earlier some traders won on. And I'll talk about why I took it, and we'll discuss the injuries, and we'll talk about the traps. And this was a short trade that Andrea, who's here, she played with me. I think she got 1.2 Rs, and John Alonzo got 1 R, and I made a little bit of money on this one. And it was an okay trade. It wasn't mind-boggling, but it wasn't bad. Bob says, as a day trader, do you hold anything overnight? No, because you use the word day trade. So overnight implies night. So night trading, not a thing. So day trading, don't hold overnight because it's day, right? Swing trading, you hold overnight. Day trading, you do not. Valid question. So on this particular trade, this stock was gapping up. Notice all the buying, all this buying. Did it look a little steep? Right? It looks a little steep. A lot of buying. I mean, amazing to get in down here and sell it there. That would have been phenomenal. Phenomenal. Like that would have been so cool. But stock was up 28%. And what's interesting here is that what you'll notice is you see how the volume spikes? Notice how the volume increases above the pre-market high. And that's after the stock is making new all-time highs. I'm sorry, not new all-time highs, but new highs on the day. And you have 4 bull candles in a row. Bullish, 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 bullish. Who's buying there, and why is that volume increasing? You were buying there a few months ago, or a few years ago, or a few hours ago. Noobs. That is me 10 years ago buying all that I can afford on margin with borrowed money. That's the worst. Buying something on margin with borrowed money. Oh yeah, that's fun. So what you get is you have a lot of volume coming in. And notice how it's just barely making a new pre-market high. So all the breakout traders are getting in. Again, it's up 28%. And then you have a perfect little doji, right? Indecision candle. So once this candle comes in, that's when you have to go, okay, I'm not going to go long. So I'm either going to go short or I'm going to do nothing. That's what a trap looks like. Now, are you able to see a second trap? I'll give you a hint. It's before the arrow that I'm pointing to. Because remember, I mentioned if you can see multiple traps, after multiple traps come in, it's a really good stock to trade. So this is a great trap because you had a very good support here. And when it opened, the stock went plummeting down because it was up 28% and people started shorting it. So they're like, oh, boom. They started shorting. I mean, look at the bear candle, bear candle, bear candle. So they started shorting and they got hosed. So you had a bear trap get placed for the bears. And then you had a bull trap get placed for the bulls. Really good example. So what ends up happening is you're playing this trade and you're doing one of two things. You're either shorting it over here with a stop over here. And you have noticed that it trades sideways for an eternity. It actually did eventually roll over late in the day. But even if you did short it with this high wave candle, your entry was here short and your stop was up here. That right there is a nice little drop for about an R and some change. And that's it. That's all you need to do. But that's looking for a trap based on nothing more than the knowledge of volume, pre-market support and resistance, a bunch of candles, and the fact that we were up 28%. So 4 little tiny things. Bunch of bull candles, right? You're not getting in bullish because it's up 28%. So you're either not buying it up there or you're going to potentially short after it breaks down that high wave candle. So here's another one. This is how we analyze the pre-market and opening volume. Because let's talk about this. This was Salesforce not too long ago. And I just want to talk about this pre-market because there's a lot of really important and really cool information here talking about traps. So first of all, if you're looking at the pre-market, you have a really, really, really solid support resistance there. Boom, 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 boom. You have a nice hammer that came in there. So really good lower shadow, really good support. So you have tons and tons of good support resistance. So Salesforce has a big gap up on earnings. Tons of bear volume comes in. Look at that. That's huge. But notice how it's a giant upper shadow, and then the very, very next candle is a huge bullish candle. Why am I making such a point on this? Well, the reason I'm making a point is because do you think some people shorted below that candle? As that candle is forming, do you think they got in and they're expecting with that bearish volume, okay, Salesforce needs to go lower? And I'm not saying that it couldn't have, right? Keep that in mind. I'm not saying it couldn't have gone lower. What I'm saying is if you're able to go back and look at the analysis on this chart and see in real time on a 3-minute chart, oh my goodness, look at this amazing trap. Look at how all of this volume came in. Tons of people tried to short. And really all the stock did was come down to old resistance, new support. Throw in the tiniest of lower shadows by 2 or 3 pennies, just to also trap some people who played the bullish breakout of pre-market. They put their stop right there and they got stopped out. If you're able to look at that and see, oh my goodness, we have all kinds of people trapped. You have bulls who are trapped who bought up here, who put their stop below that candle. They're trapped. You have the people who bought pre-market. They got stopped out with that lower shadow. They're trapped. And you have the people who are shorting below this ginormous upper shadow candle, expecting to go down. They're trapped. So within 6 minutes, you have 3 traps on the trade. That's amazing. I start seeing tons and tons of shakeout like that. Bulls that are upset, bears that are upset. Everyone's pissed off. No one knows what's going to happen. And then this candle comes in. I mean, look at that candle. That doesn't mean that it's going to go up or down, but it does mean that if this is a really good gap, which it was, and it had a good trend, which it did, and everyone knows exactly how Salesforce makes money, most likely. Could you have said, all right, well, we have an indecision bear candle here. We have an indecision bear candle here. What I'll do is just bracket trade it. If it breaks below here, I'll do nothing. And if it breaks above there, I'll go long. And I'll put my stop below the candle and I'll put my entry above the candle. Does that look like something we've talked about in recent videos, classes, and courses? It's just the same thing, but now you get to extrapolate all the data when you can look at all the candles and go, oh my goodness, there's so many different people that are trapped, and there it is. There's the high wave candle, so I'm just going to play that candle in the direction of the trend. Does it work? In this example, it does. It would have worked very nicely, right? Beautiful breakout of resistance. Now everyone's hosed. Look at all these people. Absolutely murdered. They are calling their mom and crying. So when you have that much volume getting taken out, I mean, it's going to go higher. So strong bull candle, there's the retest, and there it goes. There it goes again. So here's a question. Would I have exited everything on this candle if I got in here with the stop right there? And it's a good answer to say maybe. It depends on how I'm doing for the month. It could depend on a lot of other factors. Perhaps, maybe I would. But generally no. Because now that's a really good close above a resistance. I would have exited a tenth or a quarter or something. I would have taken something off right there for sure. So I would have exited something on that move, and then I would have taken my stop up, moved it up to here somewhere, held for another 5 or 10 minutes, and then most likely I would not have sold on that candle because that's a close above the bear candle that just came in. I would have closed on this candle, 264. And that would have been a really nice trade. Strong winning trade, cash flow creation, solid win. All based on candles. Now, here's what's interesting. What I just showed you was a gap that was also up about 28%. Ooh, intriguing. Now, again, I do realize that I just mentioned that I generally don't play stocks that are up that much. I very rarely do. But this one, what's the difference between these two gaps, right? Why did I short PLAN but not Salesforce, right? This was the Salesforce gap. Look how huge that thing is. So why did I not short Salesforce, but I did short PLAN? Here's the gap side by side. All right, so someone's saying this one has a much more bullish trend. Agreed. What else? One is gapping into a resistance. That is true. So there is some resistance over here from which it sold off before. Yep. Lisa says Salesforce cleared every single candle. That is absolutely true. They're both retest gaps, right? So they're both white candles gapping up. They're both up about 28%. Number two, I also have no idea what this stock does, PLAN. I have no clue. Never heard of it in my life. Do I know what Salesforce does, though? Yeah, I mean, pretty much everyone over here knows what Salesforce does. So with Salesforce, I'm like, yeah, I mean, I know it's going to go higher over time. So me playing Salesforce bullish, or at least not shorting it, makes more sense because I know what Salesforce is, and I'm very confident it's going to go higher over time regardless, especially with the whole COVID situation. No idea what plan is. Now, the second thing that I noticed, this little brown line that's on the screen, this was an old support, new resistance. And again, there was some resistance up here on PLAN. So I figured it could just gap up, retest, and then eventually bounce. So on plan, I was expecting the gap to fill some. I don't think that gap's going to fill all the way. It might do something like that. But I was expecting the gap to sell off a little bit because it was most likely gapping into a new resistance. But Salesforce had also, just the day before, got added to the Dow Jones. All right. So it got added to the Dow Jones, which made it even more bullish in my opinion. Now, that's not news that I would have had to search out. That's news that, you know, pretty much everyone knows if you follow the stock market at all. So I was like, yeah, okay, cool. I'm not going to short Salesforce, but I will short PLAN. And those are the reasons why. 4 or 5 different easy factors. Mostly, I don't know what PLAN is, and it's gapping up into a resistance. And it had 4, you guys remember? I'll go back. It had 4 white candles in a row with no trappages for the bears, right? There was no interesting bears like that were trapped. The bear got trapped pre-market. No one was shorting early to then get trapped. See Salesforce? You guys see the difference with the candles? So PLAN has a bunch of white candles, and then Salesforce had the same amount. 4 candles, bull, 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 4 bulls, bear, bull, bear, bear. So you had 2 people shorting right here on Salesforce, and no one was really shorting on PLAN. You guys get the point? So everyone was going long, 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 long. So I was selling to them. And Salesforce, I mean, you had so many different factors to be bullish, and you had all these bears that were trapped on actual candles. It was easier to take the break out of that. So let's talk about this for a second. Taxes and day trading. My biggest suggestion, do this for me. Search for this exact title, type that title into YouTube, or email me, and I can send you a secret interview that I did 2 years ago with a tax professional as well. But I would simply suggest listen to this interview brought to you by Real Life Trading. It's entirely free. It's called When and How to Set Up an LLC for Trading, Real Life Interview with Kent Savage. And I asked a tax dude all the questions you guys want to ask about taxes and day trading. And if you want, he offers free consultations. Amit says, do you discuss moving averages? Stay tuned for the next class, my friend. So taxes and day trading, ladies and gentlemen, I haven't found a way yet to make money and not pay taxes on things. At some point, Andrea says this is for U.S. residents. That is true. He is a U.S. professional, but he does have a lot of knowledge with offshore tax accounts. So if you want to ask him questions, if you are Canadian, you can still interview and get a consultation with him and talk to him. Matt says, please let me know when you figure that one out. How to make money, not pay taxes? At some point, I'll keep you posted. Because yeah, at some point, folks, it's just going to have to happen. Shawnee says, do you or Ricky have a similar person to talk to in Australia? I do not, Shawnee, off the top of my head. But what I could say is you could always still reach out to Kent and ask him if he knows anybody. Again, he has an offshore specialist. I don't think he did any offshore accounts in Australia, but you can at least ask him. But yeah, do that. And again, if you guys want to email me, I can also send you another secret interview. It's kind of hidden, but it's really, really good interview as well. And I just drill these people about taxes and day trading. And you know what both of them said? Both of them said, listen, dude, there's ways around never paying taxes. It just comes down to, how do you want your credit to be affected? Do you ever want to buy anything ever? Do you ever want to report income? And how hard are you willing to work to really hide all this stuff? And then the fourth statement they say is, do you ever want to spend money while you're alive? Otherwise, we can easily hide all of your profits and income and make sure that you never pay any taxes. But it's a lot of work. There's a lot of companies you're going to have to do. There's a lot of work involved. There's a lot of work. There's a lot of work. There's a lot of work. Adele says, I took 3 college classes today. This was more productive than all 3 combined. Thank you, Adele, for being here. I appreciate that kind word. So again, folks, feel free to check that out, taxes and day trading. It's on our website. It's on our interview. It's on our playlist. And that's a really good one. Now, remember, we talked about math, mitigation, margin, and momentum. Here is momentum. Matt DeLong says, Switzerland offshore accounts start at 5 million. I've checked. Me too. Yeah, me too. And they are a little bit pricey. So again, if you're trying to hide your $14,000 that you made this month, it's not worth getting a Swiss bank account or moving to the Caymans. So hold on one second. I don't know why this slide is off the books. Put that up. Okay. So as we talk about momentum, the longer you are in the markets, the better you'll be able to see and feel momentum. Oftentimes, it's as simple enough as finding a 2-day pennant pattern that's gapping out. Okay. So that's generally, I mean, if you want to just do that, type a 7 if you see the 2-day pennant pattern on Roku. Right, this was it right there. 2-day pennant pattern. You had one day and then you had another day that's inside and then it gapped above it. It gapped above all these candles. Type a 9 if you can see how many days that stock gapped above at open. I set that trade up too on a 1 minute chart and got skipped. I tried to take it. Now I was already in Roku, so I wasn't that upset. In fact, me and Edward sold some calls on Roku today. How much did you get on those, Edward? 22 Rs or something? Something outrageous. 12 Rs. Love it. What a great trade. So that was a phenomenal gap, but you could have known that was coming. Look at this. This is a 3-day pennant pattern. 3-day. And look how many days this gapped above. Do you guys see this momentum? That is the perfect gap. Screenshot it. Study this chart every single hour of your life. All right. If you want to make a lot of money doing this, because there's so much good sentiment on this chart. And by the way, if you ever get a chance to go back to the advanced series, I was telling everyone to buy Roku back here at 100. So anyway, on the side note of that, when you're talking about this phenomenal gap and a bullish trend, look at the consolidation, look at the compression. All the moving averages were doing this, right? The trend was already bullish. It already traded sideways. It's just a really, really good momentum style approach. So the more highs and candles that it's gapping above, right? This one is really, really good. Like that's a phenomenal gap. That's a phenomenal gap. This is a great gap. Gapping above a 2-day pennant pattern right there. That's a nice gap. This is a brilliant gap. That was a brilliant gap right there. This is a really good one. This is a really good one. So again, I mean, it's that momentum, that tracking the momentum down. This is Delta Airlines just the other day. So when you're talking about momentum, this is a phenomenal trade. Check this out. So this is the daily chart. Type a 4 into the chat pane if you see a 2-day pennant pattern on Delta. Because again, I just mentioned, if you want to find momentum, you can just look for 2-day pennant patterns or multiple day pennant patterns gapping out of the pennant pattern. Right? Case in point, right here, 2-day pennant pattern gapping down. Nice bear gap and go. 3-day pennant pattern gapping down. Nice bear retest gap. 2-day pennant pattern gapping down. Nice candle gapping down. 2-day pennant pattern right here, gapping up. Great one. I mean, these are so easy. They happen all the time. 2-day pennant pattern, gapping up. Phenomenal day trade. 2-day pennant pattern, gapping up. I mean, happens all the time. So this is your 3-minute chart. Do you see a high wave, indecision, bearish candle on Delta on a 3-minute chart after gapping out of a 2-day consolidation pennant pattern? Of course you do, because you have eyes. So you're either getting in above that candle or you're getting in above that candle. And then you get 1, 2, 3, 4 white candles in a row. Do you sell something up there, yes or no? Yes, you do. Now, the cool part is, did this trade even work out that great? No. It was only subpar. Like, you could have gotten in there and maybe your stop was here, and you might have won or lost very small, but it's still, who cares? I'm not going to show you all winners. That wasn't a phenomenal. I play that every day. Every day I'll take this. Boom, entry there, stop down there. That's an R and some change. Bam, 4 candles in a row, selling something. Depends on how you're doing for the month, how much you want to sell, yada, 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 so on and so forth. Great pattern. This is it. I love this pattern. It's amazing. It's such a good day trade opportunity. And you can find it on the same stocks every day. You can find 5 or 6 companies, watch those companies, and every week you have at least one opportunity on those 6 companies to do one of these trades. Brett says, do you find the TTM squeeze is effective for this? I don't personally, no. But when you do have a TTM squeeze and it does gap out of that squeeze, that can be a very fun gap. But I don't find it effective. I mean, it can be used. I just don't personally have to use it. Because again, Brett, if you start scanning for stuff, you'll run out of money so fast. I could place easily 500 trades a day on all the patterns that I know and all the setups that I know. You'll run out of money way before you run out of opportunities. So you could do a scan, that's fine, but you don't have to. Here's another one. This was a great gap. Super good gap. Look how many days it was gapping above. And the best part was, look at the 3-minute chart. Honest question. Would you have had a bear candle to get in on that setup? No. Right? What type of gap was this? Can anyone remind me? I just forgot. I can't remember. I'm going to have to go back to the last class. What type of gap is this on Beyond Meat? Right? White candle gapping up. It's a retest gap, clearing tons and tons and tons of candles. Do you see a retest? Yep. So trade comes up, comes down. You get a bear candle. Once that bull candle comes in, you probably try to get in above that wick. Doesn't do it. So, okay, it comes down. So now you have another bear candle. So once you get that third bear candle, your entry is probably still up here. Stop still there, and then it doesn't trigger. This candle comes in. So you go, okay, well, if I want to take the breakout, I can lower my entry now. So now my stop will go here. Entry will go here and stop will go down here somewhere. Trades, 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 trades. And then boom, you get a tweezer top, tweezer bottom pattern. Inside candle. Okay, so now you enter here, stop down here somewhere, and then boom, trades right back up to the resistance, bang. There's your 1R and some change, done. Great trade. Nice retest, nice S-curve. The S-curve. Andrea says you could have entered on the second candle as it went about 50% of the first candle. Absolutely. And the first candle does have a pretty okay upper shadow. So you could have also got in above that with a stop right there. So that's absolutely correct. Definitely. I did try to do that, by the way. I just got skipped. I got skipped on that trade. August, man. Let's not even bring up August. I'm happy we're in September. So Beyond Meat, really nice retest, really great trade. So how about we browse through a few more real life examples? You guys down for that? Sweet. Okay. So let's talk about Twitter today. So Twitter, was there a recent class mentioning that Twitter could be a stock that you follow every single day? Now, I don't remember what class it was. It probably was a really long time ago, most likely years ago. You'd have had to really dig through the archives to find that particular program where I was like, hey, Twitter could be a stock that you follow every single day. Now, did Twitter gap above multiple days in a row? Yes or no? Yes, it did. Is the trend bullish? Yes, it is. Did it clear a bunch of pivots? Yes, it did. Okay, all those things. So, yeah. All right, here's the 3-minute chart on Twitter. Let's do a play-by-play. All right. So this is the 3-minute chart. Why the 3-minute chart, Newsom? Go back to module 1. All right. No one actually asked that question. That was me asking my own question. But if you want to know why a 3-minute chart, module 1's for you. All right. So the market's about to open. Here we go. Bang. Market opens. Okay. So now what we're dealing with is one of two pretty easy things. This is a retest gap, white candle gapping up. So we either do enter here and stop below here, right? Stop below pre-market lows. It is a retest gap. All right, let's do that. Sounds good. So entry here on a pullback, stop below pre-market lows. I wish someone would have told me that this is a potential trade that you could have taken. I wish there was a good class on this. Now, that's the setup. Pretty easy, pretty simplistic. Do you get filled? No. All right, so do you take your computer, light it on fire with kerosene, and then throw it out the window? Probably. But it's only been 3 minutes. So if you are a really, really antsy trader, you hopefully are waiting a few more candles. All right, this candle comes in, hasn't triggered yet. This candle comes in, hasn't triggered yet. This candle comes in. What do you do on this trade? So at that point, that's the retest right here. That's it. Bull candle, 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 and then it retested. That's it. Now you can light your laptop on fire. Right? But so now you're just going to go, okay, well, I'm going to wait because I'm not getting any bear candles. I got to wait for something because that looks like the retest. Like that looks like it. Let me give it some time. It retested. So I tried my best. I didn't get filled. That's okay. So the next candle that comes in, another bull candle, new high. By the way, who's doing a wave count for me? Can you guys see the wave count? If we go back to the advanced series, 1, 2, 3, 4, 5. This is the top of wave 5 right here. Anyway, I digress. Next candle, and here comes the correction. So bear volume comes in, really nice bear volume comes in, really good bear volume, and now we're retesting this level. Look at the volume decline. Cindy says, volume spike. That's right. Look at that. Second biggest volume of the day at the absolute high with all those white candles in a row. Who's buying there? Duh, noobs. Poor noobs. Man. Poor people. Always buying the breakouts. Rick says, I probably took that trade before. Dude, I definitely took that trade before. That's the confirmation to get in bullish. Volume increasing, that's it. That's where you got to get in. So now we're pulling back. Does this volume scare you? Like, no, it's pretty. Now we've canceled the trade, but this is it. This is the retest. So if we're looking at getting in, like it's happening now. So I really like this shave bottom candle. Very, very bearish candle with very light volume. So that tells me that the bears are about to get exhausted. Boom. Oh my goodness. Is that my favorite candle of all time? I mean, 10 out of 10. What do you guys think? Yay or nay? Yeah, 10 out of 10. That is being able to eat fried chicken every single meal and never getting bad cholesterol. Incredible candle. What dreams are made out of. That is having your cake and also eating it. All right. So what else did this candle do? Not only is it an indecision candle, but what else did it do? Who can tell me? Who can tell me what else did this particular candle do? Thomas says it wicked out some bulls. Yep, so imagine someone getting in here and placing their stop right below that candle. So you wicked out some of those people. Do you have some bears who are getting in short right here? Because that's the break of the pre-market low, so they're getting in short. Absolutely. Those are the other noobs. The people who bought here, who are all upset, are now shorting right there. You ever done that before? You buy the breakout, immediately lose, and then go, fine, I'm going to short it. And you shorted it, and then just popped again. That's called not being in the present moment of trading. You're buying high and selling low, and then selling low and then buying high. You're being tractor beamed. You're not planning ahead. You're not creating your goals ahead of time. So looking at this trade, you get the high wave candle, and check out where the high candle is. The high of the candle is actually above the pre-market resistance. So here's how you could take that candle. If it go, I don't know if it's going to go up or not, but this is how you could trade it right here. Right, again, this would be above the pre-market resistance, and it would be above the high of that candle. Why am I putting my stop loss here? Is this an entirely arbitrary price? Yes, it could be anything variance of 5 or 6 cents. I'm just placing it pretty much below all this pre-market congestion. I'm placing it below here. Could it be 41.13? Yes. Could it be 41.03? Sure. Could it be 41.19? I mean, yeah, anywhere in here is totally adequate. Now, why am I not putting it right here? And that's just in case this happens. I don't want to get wicked out and lose a full R. That's how you lose less than an R. You have small risk. Too aggressive. Okay, next candle. Oh, heavens. Is that a one white soldier with an upper shadow, 1 penny below our entry? Is that a one white soldier bouncing off above the support? Oh my goodness. Bam, are we in? Yes, we are. Do we feel good about it? I don't know, we'll find out. Are we cool if we lose on this trade? Absolutely. It's a great setup. So you got to plan for this. This is what it might do. It could do it. Who knows? But you got your stop in place. You got to be prepared for that extra rotation. All righty. That's one of those candles that starts really bearish and then it turns into a perfect hammer. Rick says, this example literally just made things click in my head. I get gaps now. Man, I'm excited for tomorrow. Ladies and gentlemen, give it up for Rick. Woo! Nice. It's my favorite thing in the world, man, when someone's light bulb goes off, because this is a moment that you can come back to forever. And you go, oh, I get this. Once you get something, it can never leave. It's yours forever. It's my favorite part of all this stuff, man. So thank you for sharing. So you get a perfect bear candle, and then boom, in all day long, all day. Look, I mean, if you're not in this one, just, I'll give you my address, send me your money, because obviously you hate it. And I love money. So since you hate yours, just send it to me and I'll do cool things with it, because you're not taking this trade. I mean, look at this hammer. Look at this. Look at this. I mean, low, wrap it up. Now, phenomenal trade. Do I risk 6 R's on this trade? Right? Load the boat, go all in, get super aggressive? No. Right? With day trades, I never load boats. I just risk my R and just do my thing. Long-term trading, I can back up a boat and get some people in it for sure. Long-term, I'm very rarely wrong over a long period of time. But short-term, I mean, anything can happen. All right, next candle comes in, money sauce. Money sauce. So I'm not exiting any partial yet because we haven't hit we haven't gone anywhere, but I'm gonna move my stop. So now I move my stop. I put my stop right below this candle. And I'm gonna put my target for right here at a new high for a quarter of my position. And let's see what happens. All right, bang. Target was 42.19. The high of this candle was 42.18. What do I do? Tyler says, I took this trade this morning, 41.67 by 41, LOL. Nice, dude. Good trade. So we missed the target by a penny. So I increased it a few pennies. Do I also increase the stop a little bit? Yep, let's increase the stop a penny or two. So I increased the stop a penny or two. I increased the target a penny or two. Wow, Nancy also took this trade? Oh, I'm so proud of you. I know Lauren took this trade as well. We were in the morning room looking at this trade together today. I mean, it was phenomenal. So happy you guys took it. Dale took this trade. He said, I played at 41.58 by 41.28. Get out of town, bro. Oh my goodness. What a great trade. Now let's see if you guys can hold as long as I can. Let's see if you can hold as long as I do. All right, next candle. Ooh, nice bear candle. Okay, good resistance. That's a nice level. So if we break out of that, man, this trade should absolutely just be a maniac. The very next candle it does that? Oh my goodness. The very next candle it closes above there. This is a wrap. Look at this volume. I'm not even going to exit at a quarter now. I mean, look at that close. I'm just going to move my stop. I'm going to move my stop and see how long this horse will run. I'm going to increase my stop just a little bit. So there's my new stop loss. I'm actually putting it below this candle right here. I'm going to take my partial, move it up to, I don't know, arbitrarily 42.80. And then this is going to be exit all. 42.80. I mean, look at that close. So now, ladies and gentlemen, honestly, at this point, I will watch the trade for another 20 or 30 minutes, initially knowing that my stop is going to go here. And once I move my stop above break even, I'm going to walk away forever. Brett says, does the volume increase only concern you after 3 or 4 bull candles? Yes, because right now you got 3 bull candles, a bear candle, and then a close above. This is perfect. This is exactly what you want. All the bears are trapped. This is confirmation that we're going to go higher. This is it. We're going higher on this trade, and I'm going to hold until it does. And if I lose, that's fine. You know, if Trump comes out and says, I hate Twitter, and it goes lower, well, at least we lose money, but we don't lose a lot. Okay, next candle, very nice retest. Next candle, oh, let it keep trading sideways. No way it breaks out right here. This is so good. All right, right there, that candle, I now move my stop. Nice lower shadow. Put my stop right here, right above break even. So now I either make 2 cents on this trade or I make $1.30. So guess what Newsom does? Now I go run 10 miles. Exactly. Just go put in a nice little half marathon. No big deal. Just a good old fashioned backyard 13 miler. Right? Respond to some emails, maybe do a coaching call, maybe sell some stuff. I'm not even around. I'm not even watching it. I'm not even there. So I come back, and this is what I come back to. Good win or good win? It's a solid win. Craig says you never load the boat on day trades. Never. No. Just all regular trades because I'm in the moment. I load boats on long-term trades, but not day trades. Now, the thing is, my friends, that was today. For those who are watching this recording, thank you for being here. I really, really appreciate you enriching lives with me. But for those of you who are watching through all of this, you could have taken this trade. And we had 4 traders in this chat room right now in this live recording who did. How'd you guys finish? I would have gotten, Dale says he got 3.36 R's. Wow. Great job, Dale. And Dale is coming to the retreat. Good job, Dale. Nicely done. So the goal is, my friends, I mean, look how clear that gap is. It's beautiful. Beautiful. I could truly go through 416 examples over and over and over and over and over all night long. But I've had you guys, I think, for 2 hours. Time flies when you're having fun. Sometimes it flies first class. Got 5 minutes of questions. What do you all have for me? Daniel says, where can I get yesterday's recording? Go to Real Life Trading's YouTube, and it's on the front page. Andrea says, thanks, Jeremy. I'm out for the evening. I'll catch the rest tomorrow. Thank you, Andrea. Rick says, thanks, Jeremy. Seriously, awesome teaching. Thanks, man. I appreciate that, dude. Very, very happy you enjoyed it. Dale says, I'm so pumped for the retreat. Yeah, it's going to be sick. Nancy says, the best teacher. Woo! Love that compliment. Thank you, thank you, thank you. Chief says, you rock. I appreciate that, man. Lily says, thank you, Jeremy. I love listening to you anytime. My pleasure, my pleasure. Shawnee says, I wish us Aussies could come to the retreat. I know. I wish I could come to Australia. I mean, man. Love that place. Michael says, I still can't believe I met the man behind the show. I appreciate that, dude. I appreciate it. Brett says, on a retracement, do you typically wait for it to retest pre-market high, lows, or do you watch the candles? I would love a retest of pre-market highs or lows. That's my hope. That's what I'm hoping for. But if it doesn't and it gets close, then I kind of start just waiting for candles, waiting for the reversals, and then kind of go from there. Diego says, tomorrow is DraftKings a bullish gap and go if we break today's hammer? Yes, it is. I've already memorized that chart. It looks beautiful. So enjoy, enjoy. Craig says, when is it okay to turn a day trade into a swing trade? My opinion, you have to plan that before you get into it as a day trade, number one. Number two, it should be with a relatively small size. So you've already peeled off some partials. Number three, you love the company and you know exactly what it does and you're a big, big fan of it long term. So if you have all of those three things, those factors, you can turn a day trade into a swing trade. Daniel says, when you're day trading, do you make it an OCO order? Absolutely. We'll talk about that in either module 4 or module 5. I can't remember, but I'll be showing you exactly 2 different brokers, how you can do that. So yes, I at least always have OCO orders set up for these trades. Beautiful. One last final thing. If you do want to support real life trading, you can come to reallifetrading.com all the way to the bottom and click on RLT merchandise. Obviously, we make like no money from shirt sales, but if you want, when I say support it, if you have an RL shirt, people always ask what it is. And it's a great way to tell people what real life trading is and why they should learn and come to this website and get some information and get some instruction and just understand that this is not a mysterious beast, but this is something that anyone can conquer with the right knowledge, the right mindset, and the right approach. So ladies and gentlemen, thank you so much for being here. I truly appreciate it. Keep in mind that having a perspective, having the right perspective can change your life, and real life trading will give you that perspective. It means the world to me that you are here. Tell all of your friends and family about this program. Share it on your Facebook page. Even if no one clicks on it, you never know who's watching. Share it on your Instagram. Let us know how we can help. Let me know how I can help. Thank you for being here. Thank you for enriching lives. And until next time, love life, and trade it.